Welcome back to this afternoon's first panel on Beyond Green Bond. I'm very excited to learn all the latest green and sustainable product developments. Without further ado, let me introduce the panel moderator, Stephen Wong, Vice President, Hong Kong Green Finance Association, Deputy Executive Director, Head of Public Policy Institute, our Hong Kong Foundation. Stephen, the floor is yours, please.
Thank you, Tracy. Let me invite all of our panelists who are in Hong Kong upstage and have a seat. And then after we sit down, I will introduce each one of you. Please have a seat, as well as our distinguished guests online. So without further ado, on our left-hand side, we have Rahul Narain from the Texas. He is head of investment banking of the Texas APAC. And in the middle, we have George Hongchoy. He is obviously a well-known CEO of REIT. And on my left-hand side, Darryl Chan, Executive Director, External Hong Kong Monetary Authority. And online, we have Caroline Ramscar. She is head of Sustainable Solutions, Legal and General Investment Management. And then in the middle, online, as you see there, is Jane Su, Country Manager in International Finance Corporation, IFC. And last but not least, obviously, is Michael Shireen. He is the Senior Advisor of Bank of England. So welcome to all of you, of all those who are participating online. And obviously, today we have a great panel from different perspectives, some who are the arranger, investor, issuer, regulators. So I think we're going to give a lot of different perspectives to this topic of beyond green bonds. So how do we get beyond green bonds? We will get, I think the way we run this panel is that I'm going to invite each of our panelists to give 3 to 5 minutes, sort of lay down a foundation around this topic of beyond green bonds. And I might throw in one or two, a little bit of guidance to sort of ask them to comment on it. So first, please, Caroline, you are from the Asset Manager, Legal and General Investment, Head of Sustainable Solutions, and can you share with us some of your thoughts of what you have been seeing in Europe, in Asia, around this green and sustainable investment?
Great, yeah, hi, welcome everybody. Firstly, I want to say thank you for having me here today. I'm coming here on behalf of Legal and General Investment Management. We're part of the wider L&G group, and we are also a responsible investor. We take this very seriously. I think it's really important to give some context as to why this matters. We feel very strongly that inaction is not an option, and I think we can all, as policymakers, regulators, asset managers, be increasingly aware that there's a climate catastrophe coming, and we all have a role to play. With that being said, beyond green bonds, there's a lot more that we can be doing as asset managers on a global stage. We are seeing investors actually wanting to look for more mainstream solutions to express their climate considerations, whether that's moving to low carbon ESG indices. We've seen that happen particularly this year, or funds that better reflect their ESG preferences. That could be tilted indices, as well as these low carbon indices that we have created. We're also seeing that there is a place for green bonds and sustainability bonds. It's very important that we have those investor level conversations. But to actually meet the global challenges that we want to face, it's about moving the trillions, not the billions. And that's something that we'll all fail to meet the global challenges we've collectively been set if we don't actually start to really shift mainstream financing to these, I'd say, low carbon or ESG solutions. Now, obviously, the last few years, people have talked a lot about ESG and climate, but it's really been noticeable this year. Performance has absolutely stood up for ESG funds. That was a concern of clients maybe previously. There's different, I know jurisdictions and regions are at different paths on that journey, but we have absolutely seen this year, more than any year, that ESG funds have stood up in performance. And there is the ability for better long-term returns if you're investing in companies that have better sustainable business practices. whether that is about climate that people really care about, and obviously we're facing a greater global challenge than some of the other considerations that are starting to play out through COVID, inequality in healthcare, social inequality gap is widening. So people really want to invest and know where their money is being invested. They want a lot more transparency through these solutions. But also they want to invest in companies that are better placed to survive these market shocks. So if anything, we're seeing greater interest. We're seeing regulation be very helpful, and look forward to talking to some of the fellow panelists about that today. But regulation is only really complementary and helpful, additive, but it's not the only part of the story. What we're finding is investors are becoming much more informed on the financial implications of inaction. There is a financially material cost to this. They're also becoming much more informed on the benefits through better reporting from asset managers and also through better data and innovation in the industry, which allows us as asset managers and other players in the industry to build better funds and solutions. So all in, it's really, I'd say, hitting its peak from now on.
Thanks, Caroline, for that laying the groundwork. You mentioned regulator, friendly regulator, it's a helpful regulator to shifting the billions, if not trillions. So may I invite Darryl to sort of maybe tell us more about what you see from the overall green and sustainable finance market landscape in Hong Kong.
Okay, thank you, Stephen. I hope later in our discussion I will be able to cover the policy side as well as the regulatory side. But let me start with a general description about the green and sustainable finance scene here in Hong Kong. Actually, we are seeing a very vibrant scene and ecosystem here in Hong Kong in the green and sustainable finance space. So, for example, if we just take the green bond issuance, it's in the past year alone, actually we have a 10 billion US equivalent of green bond issuance in Hong Kong, and cumulatively we have already issued 26 billion US in Hong Kong being issued or being arranged. And then excitingly, we are also seeing newcomers into this space. So last year, for example, half of the half of the issuance or bonds arranged in Hong Kong, they're actually first-time issuers in Hong Kong. So you can tell that where actually Hong Kong as the platform has attracted many new issuers in Hong Kong. And if we look at the scope, it's also expanding. Now it covers a number of industries. Property, that's definitely a very obvious choice, and I'm sure George would have more to share with us. And then, but we are also seeing issuance used for clean energy, transport, infrastructure. So it's pretty representative of the use of green bond. And also, it's exciting development is we are also seeing a increasing diversity of these kind of issuances. So apart from the conventional green bond, we are also seeing new issuances that take the form of sustainability-linked loans, for example. Some of them will be sustainable deposits, and then transition bonds. And then lately, we're also seeing a new issuance in the form of sustainability-linked derivative products. So I think people are now sort of go through the process of just issuing conventional green bond, but actually moving into new space, what you call beyond the green bond.
Yeah.
So I think just give you a very general impression of what's happening here in Hong Kong. It's pretty exciting, but then hopefully I'll come back to regulatory side later.
Okay, I'll come back to you on that. And Darryl, you mentioned George by name, and you know, obviously he is a pioneer, his company is a pioneer in doing a lot of different interesting sustainable finance. And you also mentioned about sustainability-linked loans, and obviously something that linked REITs have done as well. So can you share some of your thought process, George, on sort of doing all these sustainable finance related products?
Thank you, Stephen. It has been, I would say, to put it in context, a long journey. We started in 2010 to start thinking about sustainability. Obviously, starting off with a sustainability report and all that. From the equity investment side, a lot of the fund managers, especially in Europe, have required companies to really take care of this before even the fund managers are allowed to invest. So we started to comply with a lot of the guidelines and from GRESB and then all the various indexes. And so that took us several years to develop our internal process of how to measure. And then in 2016, when we issued the green bond, while being the first one, it actually took us about 1.5 years to almost 2 years to talk to investors, to find out what's going on in that market until we find the right date. But picking the right date to issue a bond, actually it has less to do, to sort of disappoint the audience, less to do with what it is a green bond, but more to do with market timing in terms of pricing. And so one of the things that I will keep saying is that when it comes to a green bond, you should look at the company, whether they actually run themselves sustainable, in a sustainable manner, less about whether, question that was asked before is it cheaper or more expensive issuing green bond? Well, it depends on the day. It depends on U.S. Treasury on the day, the market condition on the day. And so in some ways, we are a bit disappointed with green bond in the sense that, usually the banks will go and try to offload their risk ASAP. So you have 70–80% of them going to, some part of it going to private banking clients who actually not thinking about green as such, but what is the interest rate you're paying? And by the time you reach Europe, where the majority of the green investors, the deal sold, and you can't even wait for the U.S. And so the bond itself doesn't give us, firstly the pricing incentive to be green, and so as we move to ESG loan, that's different, because if we achieve certain targets, we actually reduce our credit margin. And so, why we have moved on to that. And obviously, as capital market management, you want to have a balance between the two. But, we would like to see in Asia more green investors. And so that, as an issuer, through the bank, we can actually reach them. So I think that's one key part of development that we hope certainly this association and regulators and others will encourage. The banks has been extremely helpful across the board, thinking about, especially when we come to change to doing ESG loans, what are the criteria, what is measurable, what is the incentive, and they still need to make a commercially viable loan to us. So how can we actually achieve that? And so it's been a journey, and I think there is still more to do. We did try also in 2019 a convertible bond, green convertible bond, and again, it is a set of investor that we managed to tap that we probably wouldn't if it is a straight convertible. And again, it is a pocket that is new, and we hope that there will be more investors, especially in Asia. Otherwise, I think we'll still be doing a normal transaction in a bond where 60%, 70% going to private bank, which is not the way that this should develop.
Interesting. Maybe we also can, put the scope back out a little bit more away from Hong Kong to the global scene, to invite Michael, who is on the call. In your role as a co-chair of G20 Sustainable Finance Study Group, what do you see, now we spoke about Hong Kong, what do you see globally of the opportunities and challenges with the adoption of sustainability products?
Well, good afternoon, everyone. It's a real pleasure to be here, and particularly to be in Hong Kong. As many of you know, I know you have met you. We've spent a lot of time talking about green finance and how to advance the green bond market in Hong Kong, being one of the most important financial centers in the world. Now, to your point, I'd like to talk to you a little bit about what we've been doing both in the G20, the NGFS, and also then bring it back here to what some of the initiatives that the Bank of England's doing. the G20, which, as you know, was co-chaired by China, we spent a tremendous amount of time building environments and structures that helped markets, enabled markets to start thinking about how to be innovative, not just on how to think about the risks associated with green bonds, but more importantly, as we developed through it, new products. And I was very interested to hear George talk about green bond convertibles. I think as we get into products, we can talk more about other things like maybe green warrants attached to carbon trading and things of that sort. But what the G20 was able to do is for the first time take at a global stage all the key stakeholders. We brought in private sector policymakers, regulators, rating agencies, and started saying, how do we make this structure work? And I think from when we started this in 2015 to now where we are in 2020, and again, just listening to my other fellow panelists talk about where green bonds are going and even the name of this particular conference, Beyond Green Bonds, I think there's been some great movements. Now, a few things I think are really important from the regulatory point of view. The NGFS, which also came out of discussions with people in the G20, and for those that don't know, the NGFS is a collection of almost 70 central banks talking about green and sustainable finance and climate risk. I'm in the markets dynamics group, which is really talking about how do you keep advancing green sustainable financing and green bonds. And one of the areas I think is really important, and we talk about green quite a bit, but for regulators, their idea is to focus on risks, which are those things that are brown, and provide structures to move people away from that. And the types of structures and work that's going on at the Link REIT is exactly what we want to see broader markets and market players take into account. Because ultimately, from the prudential side, both the macro prudential as well as the prudential within your country, I think you're increasingly going to see regulators focus on identifying risk, which is brown participants, people that are actually keeping free-riding negative externalities, such as carbon, such as bad ESG elements in their business models and trying to finance. That is going to increasingly be difficult from the regulatory point of view, both globally and domestically. And I will probably stop here about point one last absolutely critical thing that I think is driving all of this, and which makes both Hong Kong a leader and many in Asia a leader, is the movement towards a net zero carbon. And you've seen so many different countries come out and support that. And that is not just because it's nice, they're legislating it. And that will be, I think, a huge impetus to do what Caroline said, which is we don't want to be talking billions. If we're not talking trillions, we're just simply not in the right space. So the commitments around net zero is absolutely critical. And I think that will move us beyond green bonds where we are now to a point where all bonds are just innately green.
Oh, that's very interesting. Thanks, Michael. Maybe I'll then turn to Rahul. Picking up on what George and Michael has said, the interesting development, globally and in Hong Kong. You chair the ICMA Climate Transition Finance Working Group, and you've seen a lot of actual origination of transition-themed deals. Can you go through with us some of what you have seen, and what do you think the approach should be towards sustainable finance?
Yeah, sure. Thank you, Stephen. And first of all, really thank you to HKGFA for having all of us here. For Natixis, obviously, we are playing a very active role in co-chairing the ICMA Climate Transition Finance and Sustainability-Linked Bonds working groups. And it's really a forum for us and a platform for us to be able to drive and influence what is going to happen in terms of the future innovation. Specifically for us, there's a lot of effort today on transition, okay? And for us, it's a dynamic and a holistic concept which is evolving rapidly. It's kind of like the journey that George was talking about. And it first and foremost applies to us, Natixis balance sheet, and then, of course, the clients. And then it links into the innovation of the products that will link to the needs of the clients and the markets, okay? And our core philosophy at Natixis has always been to bring the high-emitting industries through a transition process into and closer towards a green and sustainable context, okay? Because we don't want to leave behind the high-emitting industries, okay? So that is our sort of a base principle. In a carbon-constrained economy, the brown clients, they need time and they need orderly allocation of capital to be on the path to transition. And that is what we are solving for. And we have our own green weighting factor, which we have developed, which we announced a few months ago, last year, in the context of HKGFA as well. And it basically looks at our entire balance sheet, and it allocates a factor, a green weighting factor, dark brown to dark green, to every financing that we have, related to every client that we have. And the dark green has more accommodative capital allocation, and the dark brown has more punitive allocation. So it's a capital allocation methodology, to my point, about incentivizing the transition of the high emitting industries to go more towards the green. Its transition for us is also a forward-looking dimension. And so our Green and Sustainable Hub, which is our center of excellence based out of Paris and supported by all of us globally, has developed an in-house transition assessment methodology. And it really has five key principles there. Number one, exit or quit, which is the change in activity and the fundamental business model, decommissioning of assets, and how do we treat that, those type of efforts. Diversification, which also helps in transition. Decarbonization, of course, that is critical at the moment. Offsetting, can we offset some of the emissions with some other positive human actions? And then at the end of the day, low carbon solutions. So for us, when we think of transition and our model around transition, it uses these levers to create an environment to enable our clients to move towards a more dark green approach. In terms of innovation, I fully agree. Green bonds have been around for a while, but there's new innovation coming out. Sustainability-linked loans, as George was talking about, is critical. We have examples of transactions we've done for instance, COFCO last year. It was a sustainability-linked loan. We've done it for Capital Land as well, also a sustainability-linked loan. On the bond side, there's SDG bonds. Right? We did one for Mexico, a sovereign 750 million euro 7-year bond. Fantastic reception by the market, by the investors who appreciate and understand that evolution in the bond market. And then, of course, there'll be blue bonds. Right? And we'll talk about that later, Stephen.
Okay.
But that's the linkage of transition, innovation, and our core philosophy.
Well, that's very interesting, because it sounds like what you're saying is you're integrating these levers into your general capital allocation consideration. So it's not just a niche market. It's sort of back to what Caroline sort of mentioned earlier about moving the trillions, if not billions, of mainstream capital into in the right direction. So that's great. And also, finally, can I invite Jane to comment on, particularly, IFC have issued a report called Operating Principle for Impact Management, which is obviously very important because people are always looking for standardization, harmonization, and all these things in talking about sustainable finance. Can you talk more about this report, please?
Thank you. It's very nice to join all of you virtually. Look, everyone has been talking about how we can move the momentum, right? And IFC recently issued this impact investment report, which is actually originating from a year ago. We launched the impact investment initiative. So at the time we launched it, there was about 60 entities joined the impact investment group, and now, as of now, we have 94 members, which is very significant and cover all the very established institutional investors and sovereign wealth fund and DFIs. So I think the whole idea about the reports, we try to highlight the importance, right? So it's really to bringing the other side, the asset management, into this whole dialogue. So to bring everyone's awareness about what it means by impact investment, how we report it, and how we evaluate it, and how we track it. Because that will address a lot of this discussion about the greenwashing, right? And also someone mentioned earlier, I think it's George, it's not just about a company go to issue a green bond. It's also about how this company manage the whole ESG and able to move forward beyond maybe the strict ESG, look bigger about the sustainability, which will also have other elements on the social side. So I think that's kind of where we come from. As you are aware, IFC are the pioneers for the green bond issuance. So we are the first green bond issuance as DFIs. We supported a lot of clients issue their first green bond in the region or in the country. So for us to go beyond it is really to bring everybody into this initiative, to help the regulators better understand the importance of sustainable financing, to get the asset managers on board, and also above all, to help the commercial banks know more products on the green financing and support the actual operating company to invest more in the sustainable approach of doing their business or some new products. Thank you.
Thanks, Jane. Let me invite also our audiences online to submit your questions. We have got a few questions already, and I will try to integrate those into my own questions as I facilitate and moderate the panel. And also, I will invite all the panelists, if you have questions to each other, feel free to jump in and disrupt and interrupt so that you get your comments in as well. But going back to Darryl, I think Michael sort of mentioned this concept of net carbon zero. He sees it as a sort of advantage because obviously China has sort of this goal now to net zero by 2060, if I remember correctly. And obviously that will probably have an implication to our banking system as well, because a lot of our banks lend to companies who operate in China. So if mainland China have this goal, then obviously the companies will have to comply, and therefore that would probably have impact to our banking system as well. How do you sort of deal with that? And you mentioned that there are regulations that you want to talk from a Hong Kong MA perspective. Can you share some of your thoughts on that?
Sure. I think that's a great question and then a highly relevant factor in our regulatory work. Now, first of all, I think China's very strong commitment to carbon neutrality in 2060, I think that's a very encouraging sign of our global commitment to climate risk. And I think, Hong Kong being a major financial center, and then, as you mentioned, we do a lot of financial intermediation for financial institutions as well as companies in the mainland. And we do see that there's really a need for us, more through the banking system or banking sector here, how we work together with the COPs and then to enhance their awareness of the climate risk, as well as what measures we can take together to address those risks. So one thing we've been doing is last year we announced what we call the Green and Sustainable Banking Initiative. So in a nutshell, it's a project that we work together with the banking sector here in Hong Kong. We divided into a three-phase process. So we've completed the first phase, which is help the banks to do a kind of a baseline assessment about how green they are in terms of their greenness. So just to take stock of where they are now. And as expected, I mean, the outcome can be quite divergent because we do have global banking groups based in Hong Kong, and I think they will probably be more advanced in terms of managing climate risk. But then we also have more mid-sized or smaller-sized banks here in Hong Kong, some of them local or from other areas. And then they would perhaps need a bit of catch-up in this area. So I think it's important that we want to work with the banking sector together. We don't have anyone left behind. And that's important. It's a common purpose. Maybe they will need to move at a slightly different pace, but still we want everyone to move together. So after the first phase, by May this year, or June this year, we actually issued a white paper based on our baseline assessment. So in that white paper, we sort of set out our initial thoughts on how bank expected to manage climate risk. So there will be a couple of areas that we want banks to take into account in terms of risk management, in terms of disclosure, in terms of their strategy, as well as governance. So these will be the areas we want banks to be focused on. And then the next thing is actually for us to work together with the banks and then come up with what the ultimate supervisory expectation should be. And then we will enter the third phase of implementation. So that's roughly on the regulatory side. And we do think that it's not just forcing banks to face to the reality of the climate risk, but more also encourage them to think about coming up with more green products to actually also help corporates. It's not just the banks themselves, but also how to help the corporates to go greener for their operation or their projects. So that's one thing. And then when you talk about the mainland of China, I think another exciting development would be actually the Guangdong, Hong Kong, Macau, Greater Bay Area, because that is so closer to home. And interestingly, last year we saw a GBA-themed green bond being issued in Hong Kong, a huge size, 3.5 billion. So it's raised to support financial, to support clean energy, transportation, and infrastructure in the Greater Bay Area. And I do think that that's a huge area with a huge potential going forward. Just imagine we have a population size of 70 million people in the region, and then the national plan is actually in such a way that Hong Kong would be the green finance center for this region. So actually, I do think it's very promising for Hong Kong to play a more critical role in helping the development of green finance in this part of the world.
Thanks, Darryl. On this sort of regulatory thoughts, may I invite Michael as well? Darryl mentioned, obviously, it's also trying to encourage the banks to come up with the newer products to help the corporates to adapt to these changes. You mentioned previously about this risk management approach that obviously NGFS and a lot of people are thinking about. But also, some people would argue that, hey, it's not just about risk management, but it's also incentivizing banks to actually move quicker, if you will, work closer with industry. Give me an example. Is let's say in Hong Kong, green buildings is a big topic, and some people would argue that, hey, if we can prove to banks that we are green buildings or we construct green buildings, can you banks and regulators give us a bit more incentive as we in our funding, so that we can encourage a bit more people to do green building? Would that sort of thoughts contradictory to sort of the current philosophy about risk management, or is it actually is not that contradictory?
No, I think it's actually important, and both what you and George brought up. I think Hong Kong is uniquely positioned to take that next step in banking. And it's not just on the risk side, risk assessment, it's also on how, from a front to back process, how do you finance green products faster, more accurately, cheaper? And as most of you know, Hong Kong has provided, I believe it's 8 banking licenses for digital banks. And when we were in the G20, Dr. Majan and I, one of the pieces we really looked at was how technology could meaningfully change green financing in the banking sector. And in both the Bank of England, which we have a fintech accelerator, we're doing huge amounts of proof of concepts, how things like cloud, AI, blockchain, which I would argue is technology 2.0. Banks have traditionally had older technology as part of their mainframes, using things like Cobalt and Fortran. But I think that next opportunity, working with both regulators, with their clients, to be able to take that next step. So if you could imagine using a smart contract for a green mortgage on a building. The one thing that you brought up is Hong Kong the core, the gem in it is the real estate market. To be able to transition your real estate market to either, and by the way, every piece of real estate globally, if we're going to get to net zero, is going to have to either be retrofitted or new build will have to be green. So there's great opportunities there to employ technology both in the banking system, but also with the clients. Imagine monitors in buildings in Hong Kong that are in and of themselves almost like an Internet of Things that can put to the loan and the smart contract how efficient the water, the heating, the things are on the underlying asset. And so I think that next step, and it start delivering beyond green bonds because you've got real evidence-based around the greenness of the underlying assets that are being financed by the banks, and being able to step into that in a digital format, safely and securely put in blockchain, sitting on either a private or a public cloud. All of a sudden you're starting to think in very different ways that allows you to scale up. And I guess the last piece is, the important piece is you need those trillions. And obviously Caroline and all of the asset managers, insurance companies, and pension funds who you want to buy these green bonds, whether they be traditional ones or asset-based ones, you would want them to also be able to digitally be able to look inside of either a bond or an SPV and almost instantaneously understand if their green and investment preferences are being met. So I think technology working with the banking sector, their real economy clients such as real estate, and the regulators are really a powerful opportunity to step forward. And I think Hong Kong, having issued 8 digital licenses, if you can start employing that in a green way, it could be very powerful.
So it sounds like you're talking about evidences, through technology to prove to something that is green or not green. So it's about data, it's about modeling, scenario analysis, all that sort of things. Can I invite Jane to comment on this? What do you see are the hurdles to be able to actually align or harmonize across different markets and products as to what is green and what is not green?
Yeah, well, I think it's really about the standards, right? Yeah. Do we have something that is accessible to most of the people and also easy to understand? And that is something we identified early on when IFC tried to promote climate financing. It's like really the gap of the knowledge. And one of the good examples is, as we mentioned, about green building. So we actually developed an open database online called EDGE, E-G-E-G, right? This is an open database. Whether you're a developer or you're a banker, you can just go on there, put into the data you know about that building or a building to be built, and then we'll calculate whether this building can be called a green building. Because we actually have the baseline data for every country, right? And that was updated regularly. So then for us, the minimum threshold is it has to be 20% saving for water and energy for that building. Not just about the utility bills you're going to pay, also consideration were given in the construction, right? So the material that was used when manufacturing the bricks and so on and so forth. So this is kind of an online tool. Which was very different maybe from the other green building certification. That one you will hire a consultant, they will do all the analysis. For this one, as a developer, as a bank, you actually can do it easily. And then eventually, if you want to get the certification, then you will go for one of the certified. They will go to inspect just to verify the data is correct. So I think that is something very relevant. And along the same line, we are developing another one, what we call the agriculture climate smart agriculture. So agriculture actually use 80% plus of the water, and so whatever can be saved there will be significant for us, right? And one of the big ways will be the agricultural product that got rotten off. So we actually developed also a tool to try to capture the adoption of technology to avoid waste of the food, agricultural produce, which eventually will result in the climate change, positive climate change impact. So I think these are the things very important. So they are developing some other tools, whether it's go to like we call blue bond, but by the end of the day, you also need a baseline about what do you mean this is better than before, right? So these are, I think that will be one thing we need like more people to participate in to bring up this kind of, more easily accessible and easy to understand the tools to help educate the public. But I think by the end of the day, knowledge is the key to drive this forward.
Thank you. I got some interesting questions here that I think it would be good to shed some lights on. I would direct that to Caroline, you and Rahul, since I think, Caroline, you mentioned about engagement, and who talks about sort of the transitioning. And the question here is, well, at which point that you think they are beyond transition, that the bank should walk away from engaging them, or the bank should walk away from transitioning them because they are just, it's not gonna help. So at which point are you going to give up on engaging and transitioning?
Yeah, so that's a really important point. So one of our biggest, strongest views is you need to have a seat at the table. Through engagement, you can achieve much more than simply walking away, probably on a transactional basis, or divesting from a fund management perspective. We feel very strongly, though, that there needs to be engagement with consequences, particularly around climate, where we don't have time to wait, and where there's key sectors and companies which are critical to the shift to the low carbon economy, and where there's actually material risk. So we actually have a targeted engagement program we've been running for a few years called our Climate Impact Pledge. We actually have widened and deepened it this year to acknowledge that there's much more than just oil and gas industries to engage with, this deeper, more targeted engagement. We have 15 critical sectors, including such as cement, steel, and we actually assess 1,000 companies. We make the assessments public on our website, so we give transparency to investors. But where there is failure to adapt either to minimum disclosures, such as do you have an environmental policy, what's your board governance, where people fail to respond to our deeper engagement, which we carry out on around 60 companies, we will actually take voting sanctions and we will ultimately divest. So I think it's very important to have this stick at the end of the process. Across our 1.2 trillion, we vote very clearly with one voice. We send a very clear signal to the market, but sometimes you just have to ratchet up that pressure. So divestment really is a last resort, but it needs to be considered meaningfully and carefully. And really the point of the pledge is to help encourage companies to align their businesses to net zero. And what we have found, there's probably some regional people that have been famed, which is very important. You praise the winners, the people that are doing well in this, so people can see what good looks like. But you also do have to point out that those that need to step up. And we have found people take this very seriously. In fact, some of the companies have said if you hadn't gone public, we wouldn't have got our CEO's time on this. So you can affect very meaningful change. And the goal really is to bring these funds, holdings back into the portfolios.
But who cares?
So I firmly agree, there is a point at some point you might need to.
Thank you, Caroline.
Yeah, so
who
just
cares to think about?
Yeah, just to continue to elaborate on that point, the green rating factor for us is a carrot and stick by definition, right? Because the dark brown is a stick and the dark green or green is a carrot, right? But beyond that, for us, the concept of transition really takes a multidimensional approach, right? It is a strategic dialogue to have with the companies. That's what we do, right? As a bank, as a financial institution advising our clients, we are engaged with them as thought partners for strategic dialogue. And for us, having to work with them to understand and influence the fact that transition is the missing leg of climate finance, right? Making sure that the C-suite understands the concept of this, and having the enablers as green rating finance, enabling those companies to move towards green and dark green, i.e. transition, is the way we think about it. So it's about being a thought partner with them, right? Because we don't think that transition is a binary topic, okay? And it's a matter of being coherent at an organizational level, having multi-dimensional levers that I talked about earlier, and bringing the entire organization, the industry, in alignment to be able to walk that journey towards the end goal of what we call the transition pathway, right? So that, for us, it's a holistic approach of being that partner. And of course, at the end of the day, a financial institution, one of our key levers is to drive capital, to align capital with the sustainability goals of our clients and the ecosystem.
And George, can you share with us from your perspective, since you are always on the forefront in Hong Kong in this area, what are the most difficult things? You probably don't want the government to be too heavily involved in regulating this and regulating that, but what are the things that you think would be helpful to you to be able to actually move forward with the sustainable sustainability as a corporation?
Firstly, let me use the word transition in a slightly different way. Our CFO have been reported to say we currently have about a quarter of our liabilities in green bond, green loan, ESG loan, and we want to get it to 1/3.
Okay.
But what should be aiming for is actually much higher than that. And so I think for banks and it's can it be an exception if you don't do green, rather than trying to increase this? And maybe the regulators should actually do that. I mean, in some ways, it is like what Caroline said, is that it has to be an exception for some of the funds to invest in a company that is not green. So in the equity world, it's already ongoing for some of the fund manager, but in the debt and loan market, it hasn't moved that way. And so maybe we can push it a little bit harder for that transition. The second is measurement. I talk about the journey. When we first started in 2010 and say, let's save 20% of kilowatt hours by 2025, and then we managed to save over 20%, close to 25% of our kilowatt hour use compared to 2010 already. Then the question is, so what's next? Because there is a curve and it starts to flatten. And so we now need to think about the use of energy versus the GDP that we are involved in, rather than just the quantum in total. So a measure of the saving versus the economic value. The other is, once you have the measurement, how do you actually have it so that it is verifiable? So Hong Kong now have what we call a feed-in tariff scheme. So we can put solar panel on the rooftop, and we can sell the electricity generated back to the two companies, the electricity generator, at a tariff higher than what they charge us. So we started doing that, but in order to verify it, we actually use blockchain to make sure that those measurements is actually something that we can't touch. Whether that is for the electricity company or for a bank to verify the numbers, it's more secure. So I think there are several layers to this, having the right measurement, how we measure it, and then the one step that we take is also to get involved in organization to be an advocate as well. Because we are very happy to talk to anyone who wants to understand what we do, what we have done, in order that this is shared. And so our team actually get engaged with a lot of people who said, oh, we just started to do this, how can we do it? What was your journey? And it's the starting that is hard. Once the momentum's there, it's actually not something that is so difficult to do. But the inertia, as some of our fellow panel speakers have said, the inertia that you need to break in order to start is a difficult one.
But you are one of the few people that spoke to they actually want the government to do more, because usually the corporates, want to have the government more hands-off, saying, you don't mandate too much.
The point there is more to have a common standard.
Right.
I think if you think about sustainability, moving slightly away from greenness, we are filling in every year so many different checklists. From GRESB, FTSE, etc. Everyone have a slightly different checklist.
Yeah.
So I think it would be great if there is,
a common standard,
globally or nationally common standard, so that we can all follow it. Otherwise, our annual report, the back part of it, is all about how our annual report, which page actually comply with this particular standard, and then another 2-page saying which page comply with another standard. Because we have to follow so many different standards. So there's, hopefully the multinational organization and the government is actually there to narrow it down, so that we don't have to look at ourselves from all slightly different angles, depending on which guideline we want to follow.
Since we're on this topic, I might as well ask you this as well, because usually people said, even for banks, said that it's harder for them to find the data on physical risks, for example. For example, given the 2-degree or 3-degree or 4-degree scenarios, what is the flooding would be like, how much typhoon, rainfall, and landslides, and, with all the properties that you have. Do you find those data difficult to get by, or?
The benchmark is very difficult. Because when we first started, there was no benchmark in Hong Kong about what is the right sort of electricity usage for a shopping center, for example. So we then went to an organization, International Council of Shopping Centers, but it's a US based, and their climate conditions very different. And then we found out it doesn't work. So we went to Australia, where the climate is more similar, and then talked to neighbors and use theirs. And then later on, we decided might as well get Hong Kong GBA to the GBC to develop our own. And so there is no standard yet. And so for us starting, it's a challenge, because we have to almost come up with our own benchmarks to say how good we are.
Right.
So we actually want to have maybe our industry being pulled together.
Yeah.
Maybe with the support of the regulators, and say, hey, this is the standard, and you can then compare yourself.
Well, on this topic of water, I know that Natixis has been very involved with the water economy. Can you share a bit about this, the private sector financing of the water economy, and your thoughts on that?
Yeah, absolutely. So firstly, we published as a resource for the audience, a flagship report called Water Economy, Deciphering the Challenges, Financing the Opportunities. It's available on our website. But if we take a step back, right, obviously there are certain trends. The concept of population growth, urbanization, climate change, make the neural connections. What does that mean? Water scarcity, droughts, or excessive water, floods, right? And water is basically essential for life. So, and I personally have a context of I grew up in an environment where water was very scarce. And of course, cleanliness or non-cleanliness of water leads to diseases, which actually has an economic cost to a country, right? So there's a very big opportunity cost to not having access or clean water. So based on all that, we see water as an emerging sector for a lot of innovation, a lot of R&D, a lot of focus that we are doing as a bank. And so what are some of the beyond green topics that we are exploring is, number one, desalination. Right? It is a very, very big solution and focus area for us to address the global water challenges. So for instance, being a bank, we've been active in the water desalination projects for almost a decade now, right? Lots of projects in the Middle East where we have been financing, desalination efforts. We do think it requires more effort, resources in that part of the water supply chain. Blue bonds, right? We helped Bank of China issue the first blue bond. It was the first commercial bank offering of the blue bond type. for marine-related projects, wastewater treatment, sustainable water was the use of proceeds, right? Absolutely marquee groundbreaking transaction. We've also supported in 2018 World Bank with a thematic blue bond, which was privately placed, first time ever euro-denominated issued deal. So these are efforts that link a pain point about water, which is critical for life, linking it into what is happening thematically, trend-wise, which is scarcity, and then finding solutions, linking issuers like the World Bank or the Bank of China with the investor appetite, which in blue bonds and in this water context is no longer a niche. They are ready to go into the next wave of sustainable investing, which links into water. And we really find that as an area of deep innovation and effort.
Great. I'm going to ask each of the panelists to have 1 minute parting thoughts at the end. But before that, I will ask George. I mean, since you are at the forefront of this, what's next? You have done SLLs, more green convertible bonds, less green bonds since you're faced with the problems that you talked about before. What's next? Or equities, anything on equities as well? What's next?
One is to share what we've done with others, as I mentioned.
Yeah.
The other is actually our tenants are not necessarily that green. And so we need to then start some initiative. For example, we started to promote the stoppage of using single-use plastic. Very difficult, especially for takeaway food that
in COVID as well.
Right, with COVID and so we actually sponsor the purchase of cassava bags, so plant-based bags for use at Fresh Market for trial, and hopefully by sponsoring the start of it. Again, I mentioned the breaking of the inertia, how to start. And once people start using it and say, oh, it's actually not that expensive, it doesn't break as easily as plastic, then they will then take their own initiative. And we have plastic bottle recycling machines, so reverse vending in the sense that if they put the plastic bottle in, they actually get some credit back in their say Octopus card, and so. How to actually get the people who come into our property think about this is a much bigger challenge because we have less control over them. And writing a green lease, bringing the restaurants together has been a big challenge because how they deal with waste. When we can't say, okay, why don't we collect waste from each one of you and we deal with it? Because each of the tenants want to do it differently because they have their own chain-wide contracts, and we can't intervene into that easily. So that's our next stage, is how to get people who walk across our mall, rent our space to be green.
That's interesting.
And that's not an easy process.
One of the great benefit today, I thought, even for me at least personally, is that we've seen the chain is so lengthy. You're talking about tenants, property owners, and then you have corporate clients, banks, and then asset managers, regulators. So each of them, have their own green questions to answer and to work on, and in order not to be siloed, almost all of us has to really sit together once in a while to actually brainstorm about this, for the fruition of, so that we can look at the big picture, which is very rewarding for me at least. So may I invite in reverse order, each of our panelists to give us 1 minute parting thoughts, given that we are. It's covered so many different topics. I know there are some things that we haven't discussed. For example, we don't have time. Capacity building, for example, data availability. So all these things are important issues. But again, 1 minute, maybe. I'll start with Jane first, since you ended last time.
Thank you. Well, I think this discussion really reinforced how important for all the stakeholders, participants, to promote the sustainable financing and the greening. And I think Hong Kong has a unique position as a capital market hub to advocate the green financing various type of products, but also as one of the most developed urban center, giving the whole world its accelerating urbanization. I think what Hong Kong can do by saving the energy, making the city more sustainable, will also really help to lead the whole Asian region moving forward. Thank you.
Thanks, Jane. Wahoo?
Yeah, so number one, transition is critical and it's a strategic topic. Number two, linking what I said, water, and I heard the mention of equity, which we haven't really talked about. But I just wanted to mention that we have launched a water conviction-based equity index, okay? And it incentivizes, it has an inclusion of companies that has proposed better products, better management of water resources, protect rivers and oceans. So this type of an index is used in banking campaigns as well as investor interest to track these companies. Right? At the end of the day, financial innovation that we were talking about to succeed will be predicated on developing standards. George talked about that. Reliable disclosure, it's really important. Data measuring, and then the analytics behind it to make better informed decisions. And then finally, sharing success stories, best practices, learnings on a common topic that impacts all of us.
That's very helpful. Michael? If you can.
Again, it's been a great pleasure to be here. I wish I was in Hong Kong in person. It's been a really stimulating panel. And I think all the things we've talked about are the next step, the accelerating step towards beyond green bonds. The two mega trends, the ones we have to stay on, which is obviously sustainability and green, but also my earlier statement is around technology, because it's going to be the enabling element. As you mentioned, standards, disclosure, data, analytics. Those are all going to be driven by improved technology, but also things like vegetable-based bags, that's technology. New efficiencies in solar panels is technology. And so being able to take and harness communication between, let's say, the EU and China's on taxonomies. Those types of things in a digital format will allow us to do things quickly, to be able to use that digital thing so that asset managers can instantly read within a green bond their investment preferences. For investors, this is the alpha opportunity of their lifetimes to be involved in that transition. And I think them recognizing it. And I think that Hong Kong is uniquely placed because one of the most important sectors is around the transitioning of the real estate sector. So being so focused on that, having technology through their banking systems, and being a financial hub and part of the greater Bay Area, I think certainly, Hong Kong can really help drive that next step beyond green bonds and take us to a much more transparent, tech-driven type of sustainable marketplace.
Very interesting. Thank you, Michael. George?
Just to be additive to beyond what has been said, we have good conversation with banks, with bond issues, even with insurance brokers, less so with credit rating agencies.
Okay.
And so, in rating, whether we are A or B, the sustainability element has not been factored as much into credit rating agencies. So maybe that's something that we should explore a bit more.
Interesting. Thank you, George. Darryl?
Okay, so I'm going to use my 1 minute in response to one of the topics you mentioned, that which is capacity building. I think that's a hugely important topic. Earlier this year, we did a survey with the banking sector, and then we tried to identify what's the future talent need for the sector, and then they have identified actually the skill gap, which is green finance or climate risk. So, I mean, even if everyone wanted to move together, I mean, the next question is, do we have the knowledge and the skill to actually take us together to the next level. So I think that would be actually something that we have to work on, all the regulators, as well as the banking community. And I'm sure that we can also draw on the expertise of many of the resources out there, IFC or GFA. I think that's an area that we got to work together.
Thanks, Darryl. That's very helpful. Caroline?
Yeah, just one final comment to echo some of the sentiments said throughout the panel, particularly in relation to climate disclosures. It's a very welcome move from the SFC. Great work that everybody's doing. I think we just wanted to say it would be much more preferable if everybody globally could get behind one standard to make this mandatory, or at least harmonized between markets and regulatory environments. We're all global investors. Getting behind one standard will help us all play our part in getting to net zero by 2050. Thank you.
Thank you. With that positive note, I'm sure we're going to have a good future beyond green bonds. Thanks so much for all the distinguished panelists today. Thank you.
Thank you.
Thank you.